Alright, today we're going to talk about the capitulation trade, or volume bottoms, so to speak. And I want to kind of go over some things that you got to have for these trades to work well. First thing you got to have is a nice day chart. So you want a big drop. So you can see right here, and you want it to be pretty quick too. Alright, or else there's nothing to reverse. Alright, so this drop right here on Sun Edison, this is the old WFR, the old wafer, was a drop from 33.45 all the way down to 11.78 and then a big bounce. Now, what you want is the day chart like this, big setup, okay? And I'm going to compare this to lumber liquidators and show you the difference. Now, lumber liquidators has had a big drop. Now, there could have been a capitulation trade right here, and you can see you've got a support level, which I went over. You've got a support level right here. This could have been a volume bottom very easily. You want to try to play off support levels as much as you can. You're not always going to get them. Sometimes they'll happen at all-time lows, but as much as you can, it's a lot more reliable if you're playing off a pivot support level, okay, and versus a standard support level. So pivot support level, which is a little bit different. So you've got a pivot support level here. The price moved down, and then it pivoted up off of this low, okay? Now, what you don't want, so yes, could this have been a capitulation trade? Sure. I'm not sure if it was or not, but a drop from 70 to 50, okay, actually 70 to 47.60, so 23-point drop. Sure, this could have easily been. Over here, could you have got one somewhere over here? Sure, you could have. Now, you want to have some consecutive. You want it to really just be falling out of bed, right? This one kept trying to bounce, kept trying to bounce. Now, could this be a capitulation trade, volume bottom, something that you want to play down here? No. Why? Because it's consolidating a lot. You can see how tight the range is. You're not getting those big outsized moves. So this wouldn't qualify now as it would over here, where we can look at Sun Edison, SUNE. Yes, this is going to qualify. So where's our pivot support on SUNE? Okay, and the reason that you want to try to play a support is, I'll show you in a second, you can get some false moves if there's no support. And a lot of times you will crack through support. So I'm just using, again, this pivot level. This price moves up here around 25, comes all the way down here around 13, pops up, pivot, pulls, rips, okay? So the reason that you want to play these pivot levels is because they provide support to the stock. Now, a lot of times what's going to happen, they can crash through those support levels. That's where the capitulation will occur. That's where everybody's stop losses are. Those stop losses go off, the sellers are gone, only buyers are left, the stock gets a push higher, okay? And I will show you why you want to focus on that. So first thing, you got to have the day chart set up. You want an extreme move. And again, I just showed you the difference versus what you want and what you don't want. LL, yes, it's had a big move down, but now it's consolidating versus if you played that first move back at the beginning of February when it was getting a big drop, sure, you're gonna have a better shot at getting something there. You want to try to have support levels. Now, just like I said, at the bottom of these stocks, when all those stops are going off, you have what's called the capitulation, or, you know, basically where all the sellers will get out of the stock. And what's going to happen typically on that day is you're going to get high volume at the low, what's called a volume bottom. Now, let's assume that we're just looking at this stock right here, and we see this right here. Okay, we got a volume bottom relative to what we've had. And every one of these lines marks a day, okay? So this goes back to, I'm covering from July 24th right now all the way through August 6th. Now, you've got what could be a volume bottom here, right? Okay, 1872, and you get a rip to 20, okay? So you got plenty of time to take out profits. And when the stock is not holding anymore, you can bail, all right? So if it doesn't hold, let's say, right here, 1917, you're buying somewhere on the lows right here, you can go ahead and get out of the stock. That's fine. You're going to get stopped. Now, what could have saved you? Well, first of all, if 20 bucks isn't holding, $20 is a major psychological level. 20 is not holding, 25 is not holding, 30 is not holding. It's the same thing all the way around. Major psychological level here. Okay? So if 20 is not holding, you know you're going to have to get out. But you had a stab here to volume bottom. Now, what you didn't have, which I like to have, again, you're not always going to get, is if we go to the day chart and we mark 20 bucks on here, we don't necessarily have a pivot low. We do have some support here at 20. I'm not going to say there's no support here at 20. There's a minor support, and it's actually more around 1980s, but there's some minor support here. Not major support, minor support, okay? There's also some support here, minor support, 1580s, okay? But the volume bottom comes in around 20. You don't necessarily have pivot support, and the stock doesn't hold. Now, we do have, again, pivot support here, and a lot of times you will crack these support levels to get your volume and flush the stock, all right? Even on intraday charts, the same thing happens all the time, okay? So a 5-minute chart, let's pull it up, and I'll show you how we made the trade here, okay? So you've got a stock that's been selling. We've been selling from 34, and again, always towards the bottom you're going to see elevated volume. And if we pull back, and you don't have to get a calculator out, look at the volume on my 5-minute chart. Every one of these lines, day here, day here, day here, day here, day here. So I'm going all the way back now till June 9th. Look at how the volume is elevated and elevated and elevated, and then boom, right here, okay? So right here kind of starts piquing your interest again, where that one false volume bottom comes in. And I'm on a 5-minute chart. Now you can find volume bottoms on a 10-minute chart, 15-minute chart, 30-minute charts. The smaller time frame you locate it on, the tighter your risk is. If you find it on a 60-minute chart, think about the range a 60-minute chart is going to trade versus a 5-minute chart. Or think about the range a 60-minute chart is going to trade versus a 60-minute chart is going to trade versus a 5-minute chart or 1-minute chart, okay? So you kind of mark, and you can get these flushes right here. This is called the spring trade. So this is what I was talking about. You can get these flushes off through your channels. When you break through the bottom of a channel, it often will mark the sign that the stock is bottoming out because it's flushing. So you get to break through some of your descending support, which you're kind of getting right here. Just kind of mark where your pivot lines are, all right? And you can kind of see right here, we just barely breached it right here. But look what happens here that makes this significant. Now this is where we traded this. This was my biggest trade of the week, and it saved my week. I finished the week relatively flat. I didn't make any money. And this trade kind of saved my week. So I see a volume bottom come in through the support level that we were watching, okay? Through the support level that we were watching. The support level that we were watching is marked right here by this horizontal line. And I'm going to go ahead and make this. And sometimes what's going to happen as well is you can crack these support levels, and you're going to come back through to retest them. And you retest them, and if they don't hold and they fail, the stock's going to reverse back to new lows. I don't know why this is not working here. Either way, this is not working. There we go. Okay, so I marked it on with this yellow line right here. So you come through this yellow line, volume is picking up, little tail here, but look at this volume bar. High volume bottom through your support level, which is, again, that's the main thing you're looking for. If you can play them without support, but you really want some kind of a catalyst or a defense on the stock, so let's say Morgan Stanley comes out, the stock, whatever stock you're looking at, sold from 30 to 11, and Morgan Stanley comes out, defense, strong buy, $20 near-term target, or something like that. You get a volume bottom, you can play it. Right here, we actually had news as well, and we had break of support, volume bottom, so I got pretty heavy on this. And again, this is the only thing that saved my week right here. But put in a volume bottom. We were long 1237 with a stop at 1177. So we didn't catch the exact low, but look at the range of these bars. This one 5-minute bar is 1240 to 1178, and we were buying actually on this next bar right here, based off the volume bottom. And going back, it becomes more obvious when you're looking at several days of selling, and then boom, this high volume bar, okay? And this marks a short-term bottom. The stock's obviously very weak, so it could just as easily come in, drift back in, test these lows, and take out these lows, okay? But all we did here, again, playing the volume bottom, stop at the low of the day. I didn't actually let it shake me out here on this move up to 13, and all the way back down, and we were actually selling through 14 on this spike right here. I'm sorry, through 13 on this spike right here. Through this move to 1388 is where we were selling. Wish I was selling through 14. Had I been having a better week, I probably would have been a little more patient on this. But with selling. Didn't let it shake me out here because you know a stock's never just going to go straight up. Gets a little minor pull, pops up, and again through 13 selling. And determining the price target, that's a little bit of a trickier thing to do. You just got to be kind of watching the level twos. And again, I know I didn't get everything I could have out of this trade, but you're never going to get it all. So again, quick review on capitulation trades. Your day chart's got to be set up. You want to try to find them where you're breaking descending support lines. You can flush through them, barely flush through this primary one right here that I have drawn, this lower one. Coming off, barely flush through this one right here. Okay, just to breached it a little bit, but again, anytime you breach descending support, you're going to have a volume type spike. Anytime you breach ascending resistance, you're going to have a volume spike. It's required per the algorithms, right? Your rate of change increases. It's only increasing because the volume's increasing. So get a volume spike here, and again, you can draw this. You can even draw a micro descending channel line if you wanted to. But again, we're playing a long-term play here. But again, here's your descending resistance line, flush through, spot pop through. That's called a spring trade as well. Break through descending support and spike up through it. So again, day chart set up, big moves to the downside. You want descending support to be breaking. Ideally, you want to have support on your day chart, pivot support on your day chart. Volume bottom, critical through that support level. Long versus the lows. So that's how I play capitulation. If you have any questions, hopefully you like this content. If you have any questions, send me an email, help@tradewithkavin.com. Hopefully we'll see you in the chat room first thing Monday morning.